Bitcoin options, just like their traditional finance cousins, stock options, they are a financial derivative that allows you to speculate on Bitcoin. It gives you both leverage or hedging abilities for you to take profits or for you to protect your portfolio or your underlying asset, just like you're familiar with on traditional stock options. You can find Bitcoin and Ethereum options on decentralized option protocols or centralized option protocols, and these products have become more and more popular amongst crypto traders. Trading Bitcoin or other cryptocurrencies options, they work the same as stock options. The only difference is that right now, because the market's still very new, there is less liquidity than if you take, for example, stock options from the American stock market, because over there on the Nasdaq, Dow Jones, the CBOE options, they have huge amounts of liquidity there. So if you compare those to crypto is still very new, but derivatives in crypto are growing day by day. If you're new to options as a whole, you haven't used any stock options before, you haven't traded any stock options before, well, up here in the top right corner, I'm going to leave you a link for a beginner's guide on options. We also have a playlist on crypto options that allows you to understand a little bit better what is an option, how does it work, but pretty much an option is a contract that gives the buyer the right but not the obligation to sell or buy the underlying asset at the specific price agreed upon when they open the position. So again, just like stock options do. In the case of Bitcoin, the underlying asset for these options is Bitcoin or Ethereum or whatever other options you're using for an underlying asset. So let's say you're trading options for Solana or Polygon, then the underlying asset will be Solana or Polygon in these examples. The difference between these options to stock options is they are actually more closer to index options because they are cash settled. So when you are assigned or when you assign an option, what actually happens for crypto options is that they are cash settled. So on B.toopics, once you trade an option, this option is for Bitcoin, this option is for Ethereum. So you have Bitcoin and Ethereum as underlying asset that you are speculating on, but your P&L, your profit or losses, they will be all in stablecoins, so they will be cash settled. Why do we do this? So just like index options for traditional finances, once you assign or once you get assigned on this option, you're not going to get the index itself as the underlying asset. You're just going to get the amount that it was worth on expiration or the amount that was decided on the strike. With stock options, you also have the difference between American and European options. American options are options that can be assigned before the expiration date. So throughout the life of this option, you can be assigned whenever the other person that has the ability of assigning you, they feel like. So if it is profitable for them, they will assign you before the expiration date. Now with European options, you can only be assigned by expiration. So you have to wait the whole lifespan of the option unless you close it before. So you can still close it on profit or loss. But to be assigned, you have to wait, or to assign, you have to wait all the end to the expiration itself of the option. And again, this is something different that we don't have in crypto options. Crypto options are all European-like. So they behave like European options for the stock market, meaning that you cannot assign before the expiration date, or you cannot get assigned before the expiration date itself of the option. Regarding the position of these options, they again behave like traditional options. I already explained what these three terms are, but I'm just going to cover this again, but it is on the video that we talked about before. It is in the money, out of the money, and at the money. So ETM, OTM, and ATM. So what these three terms mean. So in the money is the position when the option has intrinsic value, meaning that if you exercise the option or you close the options, you would have profit. For a call option, in the money means that the market price of the underlying asset is currently above of the strike of the option that you have. If so, for example, if Bitcoin is at $70,000 and your option strike is at $65,000, this option is in the money, meaning that if you were to close that option, you would be profitable because it is in the money, it has a lot of intrinsic value. Now, out of the money is the opposite. The example is Bitcoin is at $70,000, but your strike is at $75,000. So that option is out of the money, meaning that if you were to close this option, you would lose money on this trade because Bitcoin has yet to catch up to your strike. So you have no intrinsic value, you just have extrinsic value. For put options, it is the opposite. So let's say Bitcoin is at $70,000 and your strike price is at $65,000. So that option is out of the money because Bitcoin has yet to go down and surpass the strike that you chose. And at the money is fairly simple. At the money means that the option, the strike of the option, is at the same market price of the underlying asset. So you have a strike that is $70,000 and you have Bitcoin that is trading $70,000. So this is an at the money option. And also calls versus puts, again, something that is very simple and we explained before. Basically, when you buy a call is because you're longing the asset. When you buy a put is because you're shorting the underlying asset. Of course, you can also sell a call and sell a put. But if you are a beginner, I recommend you understand buying a call or buying a put, how they work, and then you understand what it means to sell a call or sell a put, which usually is used to hedging, to making passive income, or to do some more advanced strategies. So again, we explained on our beginning guides, we explained these on also the spreads video. So there's a lot of content for you to digest before you get the full grasp of what selling options is, selling a call or selling a put. What is the P&L that it has? Now, there are some risks when you're trading options, as of course, any investment that you do, it can go south, it can go against you. So what are the risks when you're trading options or Bitcoin or Ethereum options, crypto options in general? Well, if you have the possibility, you should start with a demo account. We don't have that on B.toopics yet, but you should at least start to taking notes of these trades before opening the trades. So you see an option that you believe will go in your favor, you write its current premium, you write Bitcoin's current price, and then you see where it goes by expiration. You check again the price before it expires, check again the price of that option. You see if the price got higher, so the premium got higher, meaning you would have made money if Bitcoin moved like you wanted it to. So make sure you test it out before you understand the risks behind options. Because again, if you're buying an option, the risk, the maximum risk that you have is the amount of money you paid to buy this option. But if you're selling an option, things can get a little bit more sketchy because again, they could be cash covered options and not underlying asset covered options. This is something that you need to be very, very careful. So beware of the risks. Options are more profitable than spot trading, but they are also a little bit riskier. What does it mean? Well, they offer you leverage and they offer you hedging abilities. So meaning that you don't need to have $10,000 worth of Bitcoin for you to long Bitcoin. You can also just buy a call. It will give you pretty much the same results as holding $10,000 worth of Bitcoin with a fraction of that cost because it is leverage. Options are leveraged derivatives by the nature of them. So let's say, for example, you have a $70,000 Bitcoin option that you bought, and this option expires in 1 month. So in a month from now, if Bitcoin is not at $70,000, if it is below $70,000, all the premium that you paid for to open the position, let's say you paid $500, these $500 are going to be gone. You're going to lose the premium. It's not like you're still going to hold an asset and that asset's going to have lost its value. No, you're going to lose the whole premium. Why? Because an option has an expiration. So you need to be careful with this. The expiration of this option and understanding the risks that you could lose the whole amount of premium that you deposited. So now that you understand a little bit, if you are a more beginner user and you watch the video, how can you trade? Well, this is where we go to B.toopics itself. It's going to be b.toopics.io. The link is going to be the first link in the description. So make sure you go through that link. It will make sure we know where people are coming from and how we can help these people to do specific content to track pretty much the status of how many of you are going there. So the link is going to be in the description, the first link for B.toopics. Once you get there, you're going to see the options tab right here, and you can choose between Bitcoin or Ethereum. So let's take a look at Bitcoin first. You will have a graph right here that you can switch to a table, but the graph is visually better for me, at least, so I have an understanding on where Bitcoin is currently. So on the left side is where you're going to choose between calls and puts. Right now, this is the new UI. If you watch the other videos where we covered B.toopics, you can see the UI is different. This is the new UI. We just launched it yesterday. And the thing is, we're still working. But now with this new front end, we can add way more things. So expect to see a lot of updates. We're going to be covering a lot of updates here. And one of these updates is the ability to have a pro version. So pro version, you're going to be able to open multiple leg strategies. You're going to be able to sell options. So this will come in the future. So far, you can only buy options, or you can go to the income products tab, and that's where we have the spreads. So we have vertical spreads there, credit spreads, so which again we covered in our video. But just for you to buy options, buy Bitcoin options, you can go right here and you can choose the expiration date. This is a series, so you can go all the way to next year. You can see you have 28th of March 2025 as an expiration, and you have multiple other to choose from. You have April 29th and 30th, then you have May 1st, May 3rd, May 10th. There's a lot of strikes for you to pick from. Let's say we go to May 1st. We have a footnote here saying that these options expire at 8 a.m. UTC of that day. So May 1st, it will be at 8 a.m. UTC. This is when the expiration happens, and the pricing that it counts, it is the pricing 30 minutes before expiration. And of course, you're not going to be able to trade these options 2 hours prior to this event. Once you chose and you understand this, you can go to the strike itself. The strike is the one we talked about before when we were mentioning at the money, in the money, or out of the money. So this is the strike. It is the pretty much the goal. You want the underlying asset to go above or below if you're using a put, but the price that you want Bitcoin to go past or to stay past if you buy an in the money call. So again, let's say Bitcoin is now at 63, we sell a 66. So what we want is that by May 1st, Bitcoin is above $66,000. So here you see that once you put the strike, it gives you already the price for one contract. So for you to open one contract of this option expiring May 1st at $66,000, you have to pay $455. This is called the premium. This is the premium of the option, just like you're used to do with Robinhood, Interactive Brokers, Tasty Trade, whatever it is you're using, like Webull, whatever it is. You're gonna see the premium, you're gonna see the strike, you're gonna see the expiration date, all like just like you're seeing here. And then you enter the amount. If you want 2 contracts, it's gonna be the double of the current price. This is right here. But you can also go 0.1 of an option, which is what you cannot do with stock options. Here you can go fractions of an option, which makes it cheaper for you if you don't have the capital to open a full position. So if I wanted to buy 0.1 of an option expiring May 1st, it will be $45. So let's say you believe Bitcoin will be above 66, you go ahead and you click on open position. It asks you, are you sure? You click yes, and the request will be processed. Once you scroll down a little bit, you will see the position right here, the price that you paid, the amount of contracts, and the expiration, and you will be able to sell after a little bit. Of course, there's a buffer, but you will be able to sell the option here before the expiration if you want to take profits before, or if you want to just switch the option, like you don't think is going to go in your favor anymore, but you want to switch, you want to hedge, whatever you want to do, you can close it. There's just a little buffer once you open the position. And as always, this works just as much with puts. You can go for puts, you can choose the strike, the expiration date, just like we did before. And not only this, you can also go for Ethereum options. If you go right here and you click on Ethereum, you will be able to see the graph for Ethereum, switch on and off the table just like we did before, and do the same things, calls and puts for Ethereum as well. So if you're better at reading the Ethereum graph instead of Bitcoin graph, or you're more bullish in Ethereum, this is also for you as well. So why should you open an option position instead of a futures position? Again, we've covered option versus futures in this video right here, but basically the thing is there is no liquidation. With futures, if you open a position and it goes against you, if it goes way against you, you're going to be liquidated, meaning that you either have to provide more collateral to keep the position open, or they're just going to close the position and you're going to lose your funds that you deposited. So it's not like options where you know how much you're going to lose and how much you're going to make. No, with futures, you're pretty much screwed if the underlying asset goes against you. So you could, yes, make a lot of money if the underlying asset goes in your favor because you're leveraged, but also if it is on the opposite, you're going to lose a lot of money before you wanted to because you will be liquidated. You have to provide more capital, you have to provide more margin, whatever it is. With futures, you just have that hassle that you don't have with options. Of course, with options, it comes a little bit of, there's a little bit more of a learning curve, but once you understand options, you know how much better they are from futures. So I hope you're able to understand how to open an option on B.toopics. If you did, and if this content was useful for you, and if you made profits from opening these options, don't forget to comment down below. And if you did, I'll be there answering your comments as always. So thank you so much for watching, and I'll catch you guys in the next video. Peace out.